What's going on, everyone? My name is Craig Curelop, aka the Fi Guy. In this video, I want to talk to you guys about how much I love PMI. Right? You've probably never heard anyone say that they love PMI before, but I'm going to explain why in this video. Before we get into it, I want to explain a little bit about what PMI is. Right? PMI is an acronym for Private Mortgage Insurance. When you purchase a property, like many house hackers do, with less than 20% down, you are required to pay a premium on your monthly payment, which is called private mortgage insurance. Now, this typically ranges anywhere from 0.35% to 1% of the loan amount over the course of a year, right? So typically it's about $100, maybe $200 a month, at least in the Denver market. That's what we see it at. And I'm going to tell you why this is one of the greatest things to ever hit real estate. People obviously don't want to pay it. Many people don't house hack because they don't want to pay the extra couple $100 a month in order that enables them to house hack, right? But let me explain why it's good, right? So for the first things first, right? Let's look at it from the bank's perspective, right? If you were a bank, would you feel more comfortable lending someone 80% of that value? Or would you feel more comfortable lending them 97% of that value, right? You'd probably feel more comfortable lending 80% of that value, right? So because the banks are lending us more money as it relates to the value of the property, that's a riskier bet for them. So in order for them to do that, they need to charge us this PMI to make it worth it for them, right? You would do that too, right? When you want, for a more risky investment, you would want a higher return. Well, the banks are the same way, right? That's what that's allowing. And if it wasn't for this PMI, we would not be able to purchase properties for 3% down or even as low as 1% down nowadays with down payment assistance programs, right? So let's take two house hackers. We've got John and we've got Sally. John is all aboard the house hacking train, absolutely loves it, and is okay with paying PMI, right? John, they're going to both buy $400,000 houses. We're going to keep that number just to make the numbers a little bit easier for me. So a $400,000 house. In order to purchase that house, John is going to go 3% down. He needs $12,000 as a down payment. After closing costs and all of that, he's probably going to need a little over $15,000 to purchase this property. John can probably save up $15,000 in a year or two to get that first property, and after that, he would have totally eliminated his rent expense because guess what? Guess who's paying that PMI? Guess who's paying that mortgage payment? That's right, his tenants are. And so those tenants are paying his monthly payment. He's living for free, able to save even more money, and in the next year, when his year-long requirement is up, he's able to purchase another house hack, right? For the same, let's say it's for the same price, right? For another 15 grand. And he's easily able to save that up. After 10 years, John can systematically do this year over year over year if he wants to go 10 years, right? Most people probably don't want to house hack 10 years, but let's say he did want to go 10 years. He would have 10 properties, cash flowing him about $10,000 a month, right? Assuming each property cash flows him $1,000 a month. Now you may be saying, oh, there's no way we could get $1,000 a month. That's crazy. We get that all the time here in Denver. So I definitely, obviously it depends on where your market is, and the numbers are just used for ease of calculation. So let's go visit Sally, right? Sally is very conservative, does not want to pay PMI. Whatever she does, she is not paying PMI. So what does she do, right? She's going to buy that same $400,000 house, but instead of putting $15,000 down, she's got to save 20%. She's got to save $80,000 after closing costs, probably closer to $85,000 to $90,000 just to purchase the same property. How long do you think it's going to take Sally to save up that $80,000, right? Probably at least 4 times as long as John, assuming, they save the same amounts and all other variables are equal. So after year 4, John's got 4 properties, cash flowing $4,000 a month. Sally's got her first one. Maybe it's cash flowing her $1,500 a month, because she's not paying PMI and the mortgage will be a little bit lower, right? And then another 4 years, maybe she can buy another one, and she's got 2 properties, at the 10-year mark, right? She'll have 2 properties halfway to her third, cash flowing her about $3,000 a month, while John's got 10 properties, cash flowing $10,000 a month. And guess what? Just because you buy it with a low percent down doesn't mean the properties don't appreciate, doesn't mean you don't get the tax benefits, the loan pay down, all the other great things that real estate has to offer. So next time you say, I hate PMI, I don't want to pay PMI, just think about it for a minute. It really allows you to build your net worth and build your wealth much quicker than putting a 20% down on a traditional property. So that's the end of the video, guys. I hope you enjoyed it. I hope you have a little better sense of how PMI is actually really helpful, and especially for house hackers. So if you like the video, please give us a thumbs up, a comment, a like, a review. All of these are super helpful. We love just all the support that you guys have been giving us. And this is how we make the channel better, right? Let us know what we can do better. With that being said, we'll see you on the next video.